Corporate treasuries don't chase hype. They move when systems get faster, safer, and easier to control. And quietly, that's what's happening. Ripple now controls a regulated payment rail in Singapore, a global treasury platform used by thousands of corporates, and a stable dollar designed for real settlement. None of this looks dramatic from the outside. But inside the software that CFOs rely on every day, something is shifting. By the end of this video, the question won't be, is crypto going mainstream? It'll be, did Ripple just plug digital settlement directly into corporate finance? Most people still assume Ripple's future will be decided by exchange listings, ETF inflows, or speculative cycles. But the real battleground isn't public markets at all. It's inside the operational heart of corporate finance, the treasury engines that control daily liquidity, short-term cash, and the rails that global businesses depend on. And this is where the story becomes more interesting. Ripple isn't telling companies to switch rails, migrate platforms, or adopt blockchain overnight. They're doing something quieter. They're embedding optional real-time settlement capabilities inside the systems treasurers already use, without forcing lock-in, without replacing existing workflows, and without pushing mandates. It creates a tension the market hasn't resolved yet. Public narratives look for disruption. Treasury leaders look for systems that evolve without breaking anything. Ripple and GTreasury are betting that the future belongs to those who deliver choice, not pressure. Rails that enhance operations, not derail them. Everything here is for educational and entertainment purposes only, not financial advice. Always do your own research before making any investment decisions. If clear, no hype crypto education helps you make sense of all this. Hit like and subscribe. It tells YouTube this series is worth showing to other newcomers, and it helps me keep building it for you. The tension that drives this whole story is simple. Crypto culture still thinks adoption means new tokens, new listings, or new narratives. Corporate treasury culture only cares about three things: visibility, control, and liquidity. Ripple plus GTreasury is an attempt to translate digital assets into those three metrics. If it works, XRP becomes part of the plumbing, not the pitch. To understand why this deal matters, you have to strip away the noise and look at what GTreasury actually is. It is not a wallet. It is not a DeFi dashboard. It is a full treasury management system that sits above a company's bank accounts, payment links, debt, and investments. Treasury teams use it to see cash across dozens of banks, schedule payments, manage FX exposure, and enforce internal policy. For many large corporates, if a payment, hedge, or liquidity move is not visible in this cockpit, it basically does not exist. That is the layer Ripple just bought. Ripple's earlier acquisitions built the institutional stack: custody through regulated trust companies, a prime brokerage for market access, a stable dollar for settlement, and payment rails that already move value across borders. GTreasury is the missing piece that connects all of that into the daily rhythm of corporate finance. It is the difference between infrastructure available and infrastructure embedded. So, when Ripple talks about unlocking trapped capital and real-time liquidity, this is where that claim either becomes real or stays as marketing. If you cannot reach the treasurer's screen, you cannot change how corporates move money. With GTreasury, Ripple now owns one of those screens. The Monetary Authority of Singapore has become one of the most important regulators in the world for digital settlement. Not because they push new rails on institutions, but because they create frameworks that support optionality. Ripple's expanded license sits directly inside this philosophy. Ripple can now provide regulated cross-border services through multiple rails: SWIFT, domestic bank payments, traditional fiat pathways, and instant digital settlement using Ripple's stable dollar, or the XRP Ledger. Nothing forces a treasurer to pick one rail over another. That's the point. This is rail agnosticism as architecture, not marketing. It means a treasury department can evaluate execution options, based on timing, cost, FX needs, or liquidity constraints, not based on what a vendor wants them to use. Traditional rails remain intact. Digital asset rails are additive. The treasurer stays in control. Singapore amplifies this approach because it's already the regional headquarters for global treasury centers. If a new settlement method is going to fit into multinational workflows anywhere first, it's here, in a jurisdiction that values stability, compliance, and proven operational performance as much as speed. On paper, a treasury management system is just software. In practice, it is the operating layer for how a company's cash behaves. Treasurers log in to see consolidated balances, outstanding payments, FX positions, credit facilities, and short-term investments. They compare forecasts with actuals, decide where to hold buffers, and schedule sweeps between entities. GTreasury connects into the systems where payments actually begin. The company's Enterprise Resource Planning System, or ERP. That's the software that handles invoices, payroll, supplier payments, and internal approvals. SAP, Oracle, and NetSuite are the big names. But the concept is simple. The ERP is where a business decides what to pay. GTreasury is where the company decides how and when to pay. A payment instruction might start in an ERP, route through GTreasury for policy checks and liquidity decisions, and then flow out to a bank or payment rail. The whole point is centralized control over decentralized accounts. When Ripple's infrastructure is wired into that flow, it doesn't show up as a crypto add-on. It shows up as another settlement option the treasurer can select. Instead of pre-funding an account days in advance on a slow corridor, they can choose a path that moves value in seconds and reconciles immediately against the ledger. The company's policy framework, approval hierarchy, and audit trail do not change. What changes is the time dimension and the way liquidity behaves. That is the core of real-time settlement. Not just faster payments, but a different pattern of when and where cash needs to sit. GTreasury's new AI engine, GSmart, introduces a capability most people overlook. Treasury forecasting is where liquidity inefficiency actually begins, not at settlement. The AI doesn't just spot patterns. It exposes liquidity windows hours or even days before a human analyst would notice them. Now combine that predictive view with a settlement environment that is truly rail agnostic. If the AI detects a shortfall in a region with expensive corridors, the treasurer is no longer locked into a traditional wire or a multi-day SWIFT route. They can select a faster digital rail, keep conventional rails for lower priority flows, or blend both in a hybrid model. This is the shift away from rigid execution toward conditional routing based on treasury-defined logic. And when that logic includes Ripple's stable dollar and real-time settlement on the XRP Ledger, the need for pre-funding begins to fall. Idle liquidity shrinks. Capital efficiency rises. This isn't disruption. It's incremental optimization. The ripples not waves approach that treasury teams actually prefer. They adopt what makes sense at their pace without replacing the systems they rely on. Real-world treasury adoption doesn't happen because of theory. It happens when infrastructure is proven, reliable, and already operating at scale. That's where Ripple's cross-border network stands out. Ripple's Rails power production flows across dozens of corridors today. Tranglo processes instant payouts across 70 countries. SBI Remit settled Japan-Thailand remittances in real time using Ripple technology. MoneyMatch reduced settlement costs for small businesses in Malaysia. Travelex Bank expanded its multi-currency reach through Ripple's network. These aren't pilots or experiments. They are regulated financial institutions moving real money under the same compliance expectations corporates face. GTreasury's platform is built to bring that kind of proven infrastructure directly into the treasury execution layer. Not to force it, not to replace existing rails, but to offer it alongside SWIFT domestic bank transfers, or ACH, all visible in the same dashboards a treasurer already trusts. And now, With Ripple's stable dollar available as regulated digital cash, corporate liquidity can move in seconds between subsidiaries, markets, or banking partners whenever the business case is strong enough. Treasurers finally gain what they've wanted for decades: execution optionality without operational disruption. When you put all of this together, XRP's role becomes clearer and less emotional. On the XRP Ledger, pathfinding and auto-bridging can make XRP the most efficient routing asset between two currencies when liquidity is deep and spreads are tight. In those cases, using XRP can reduce cost or improve execution quality for the underlying payment. In other corridors, it may make more sense to route through different paths or rely purely on fiat and stable dollar legs. The point is that XRP becomes an option inside the routing engine, not a mandatory switch or a speculative bet. Its usage is driven by liquidity conditions, pricing, and risk controls, not by ideology. For long-term holders, that may feel less exciting than bold predictions. But structurally, it is much stronger. If real corporate flows begin to use Ripple's stack because it solves Treasury problems, XRP's involvement becomes a byproduct of the system doing what it was designed to do. That is a very different story from exchange-driven spikes. Treasury teams don't adopt technology because it's new. They adopt it because it's proven. That's the standard Ripple has to meet. Optional rails must stay reliable. Every settlement path must remain audit-ready. Nothing can disrupt control, forecasting stability, or reconciliation. Tokenization adds a second dimension to this. Boards are already discussing how tokenized assets, tokenized treasuries, and real-time cash instruments fit into future liquidity strategy. Ripple and GTreasury are positioning their combined system so that when a corporate decides to tokenize assets, collateral, or short-term instruments, they won't need a disruptive platform migration. The rails are already in place: optional, supervised, and production tested. This is the quiet advantage behind Ripple's approach. No pressure, no forced transitions. Just infrastructure that evolves at the pace treasurers consider acceptable. Treasury leaders don't want waves. They want controlled, incremental changes that compound into major efficiency gains over time. Ripple and GTreasury are aiming to provide that environment. But regulators, auditors, and internal risk committees will need to see sustained proof as each new capability comes online. When you step back, the pattern becomes unmistakable. Ripple isn't trying to replace Treasury systems. They're trying to slip inside them, quietly, optionally, safely. And the Asia-Pacific region, or APAC, is the natural entry point because it already runs on advanced Treasury hubs and pragmatic regulatory frameworks. The promise isn't disruption, it's evolution. Ripples, not waves. Singapore provides the regulatory perimeter. GTreasury provides the operational cockpit. Ripple provides instant rail-agnostic settlement rails that treasurers can activate the moment the business case is strong enough. And tokenization waits in the background for the moment boards decide it's time. Adoption won't begin with retail. It won't begin with exchanges. It will begin when a treasury team, somewhere in APAC, realizes they can settle a payment, rebalance liquidity, or move collateral in seconds without changing the system they already trust. That's the quiet shift that's beginning now. Thanks for watching, and I'll see you in the next deep dive. This channel is for educational and entertainment purposes only, and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please consider liking, subscribing, leaving a comment, or sharing it with a friend.